Welcome to the Economy and Politics Show. I'm Otto Abasekong. In this edition, we review key developments in the global markets and implications on emerging markets and economies like Nigeria. Last week, China, the second largest economy in the world, has not been having it easy, and when it comes to its economic and market performance at the moment, despite the devaluation of this currency, the yuan, and cuts on its interest rate, it posted a slow growth index and a compounding market record, which on Tuesday, the 25th of August, went down by 8% from the Shanghai Composite. This data for August 2026 showed a record of $28 billion in outflows from equity funds in the entire global markets from this effect, which was very interesting. This adversely affected key markets like the US Dow Jones, which posted on the data a 3.5% drop, India 5.9%, Asia Pacific a range of 4 to 5%, and even the Nigerian Stock Exchange on that date 2.22%, and Europe between 3 and 4%. We spoke with Mr. Onyema, the CEO of the Nigerian Stock Exchange, last week when we asked him about this development, and he shared how critical China was to the global economy, as well as something very interesting, the hyperconnectivity of the global markets.
As you know, we're living in a hyper-connected world, a world where shocks in one region end up manifesting themselves in another region. We've seen a slight slowdown in China and two currency devaluations that has sent some shocks. When you couple that with the fact that the US is beginning to look to consider whether they should start increasing interest rates, and you have the situation in Europe with Greece, which is really a European story. So if you have all of that together, and you're looking from a global perspective, where we are looking to have global growth of 3.5%, and then you have the second largest economy in the world slowing down, which is a major source of that growth that we've seen across the globe. Sure, it's going to affect economies that are highly connected to such an economy. So that is what we're seeing.
Now, for the International Monetary Fund and the key analysts, the China episode is more of a correction and adjustment. I know there have been a lot of fears of another looming recession. According to the IMF, the slowing of the Chinese economy is natural, although it created a shock to the global financial markets. The IMF also believes that this was merely reactionary and not indicative of a long-term institutional weakness. That is for global investors to take note of. Interestingly, the last trading days of August has posted positive gains reflective from the Dow Jones, which recorded plus 600 gains the following day after the episode of what happened on August 25th. We've seen rallies also from the Nigerian Stock Exchange and other emerging markets, which revealed the issues of volatility. And of course, investors have been more skeptical than being optimistic. But we just believe that as the month closes today, we should see some different tone from the new month. Three things are cardinal to take away from the global market scenario at the moment. It is very clear that first, the China slowdown is really having an impact. The declining crude oil price is a second issue, which is hovering between 40 to 42. And also, the possibility of the US Fed, that's the Federal Reserve of the US, raising its interest rates in September remains a very key issue for all investors and analysts. Now let's go to something very interesting, which is the second quarter economic growth analysis for Nigeria. For the National Bureau of Statistics, it was released that about 69.9% decline in jobs created. So jobs is still a very key issue and, of course, part of the agenda of this government to tackle unemployment. In terms of GDP, 2.35% year-on-year growth for second quarter, which was 1.61% lower from the growth recorded in the preceding quarter, and also 4.19% from the growth recorded in the corresponding quarter of 2014, which is not too good. In terms of oil production in the second quarter 2015, it stood at 2.05 million barrels per day. That's 5.9% lower from production in the first quarter of 2015 and 4.19% from the corresponding quarter in 2014. The oil sector represents 9.8% of the real GDP of Nigeria, which shows how crucial it is to the economy. We can see how the effect of the crude oil price decline is affecting the economy. For the non-oil sector driven by trade, the telecommunications, crop production and construction, Growth level for second quarter 2015 was 3.46%, which meant a decline by 2.13 percent points from the first quarter 2015 and 3.26% from the corresponding quarters in 2014. That shows where our economy is at the moment and really needs a lot of input from the fiscal side. We're all awaiting the agenda of President Muhammadu Buhari. Now, 3 issues before we round up this edition. The first key issue that we analysts and every Nigerian will be looking at is, will the subsidy regime be reviewed in terms of removal? There's a lot of pros for it, but the ball is in the court of Mr. President. The second is, will the CBN devalue the Naira again before the end of this year? FBN Capital released analysis showing that it should likely take that step, and that will really have impact on the economy. And finally, how long will it take for President Muhammadu Buhari to unfold his economic agenda? We see that the monetary side is doing its best. The whole financial markets and even capital markets has been going through its own experience, but the unfolding of the economic agenda of the president from the fiscal angle becomes a very critical issue, and all eyes will be watching as it unfolds. And that will be all for this edition of the Economy and Politics Show. You can log on to our social media platform, particularly at Twitter at EcopoleNG, to get further insight analysis on the political economy of Nigeria, and also our website www.webtvng.com, where you will get video uploads on what is happening in the country. I know that the month of August has been very interesting with so many rivaling events, but we're hopeful that September should come with great turnings. And so, from this desk, thank you for watching. Looking forward to a very eventful September. Have a lovely day.